Alright guys, welcome back to the channel. I want to share with you a very common kind of question that we get asked around Fibonacci. And everyone knows about Fibonacci in trading. Everyone knows that there are certain ratios that are respected and how you can use them in your trading. And some people are unsure how you use the retracement tool and the extension tool. So we got into a discussion in today's live room, and I thought it'd be valuable to share with you guys exactly what we went over, because I gave an example of how you might use that tool if you're looking for a trend, if you're looking for a reversal, and how to use it and combine it with other discretionary filters as a trader to give you real high probability setups. And I also talk about how every order should, the same amount of effort and analysis should go into every order, and I'll explain why. So stay to the end, and I'm going to be showing you exactly how you can pinpoint the highest probability setups using Fibonacci. So let's get stuck in. Let's talk a little bit about the Fib extension tool then, so you guys can really see how this stuff can work. Because a Fib extension tool is typically used in a trend, okay, and it's used primarily to predict where a market is like to extend to. If you are a trend trader, trend following trader, you are looking for an extension. You're looking for you're looking to get long or get short based on what direction the trend's in, and you're looking for an extended move to take targets. That's what a trend trader does. They don't take targets just at the lows or the highs. They take targets at an extension of the move. Where you might use the trend extension, the Fib extension tool, is, let's just say that we are looking for a trending market, right? So first of all, we've got to identify that we're in a trend. X, A, B, C, D, okay, we're in a trend, right? Now we've broken close below the low. Now, you might have been looking to get in up here, or you might be waiting for a confirmation of the break and close below. Either way, let's just say you're a trend following trader and you're looking to short this market. Ideally, you'd be looking to short, right? The question is, where is this market likely to go to next? Now, one of the powerful tools in all trading is Fibonacci retracements and Fibonacci extensions. Fibonacci numbers and ratios are well respected in the markets, as we all know. Why are they? We don't care. We don't concern ourselves. We just know they are. And one of the things you can use a Fib extension tool for, first of all, a retracement. The Fib retracement tool is used for where market's likely to retrace to. And remember, we always say that 618 is the golden number, golden mean. So what you're doing is you're waiting for a pullback, and then on this pullback, you're trying to catch the move at the most high probability zone of a reversal, so it continues down, right? So you're trying to capture the high, basically, to sell high and buy low, right? Now, the Fib retracement tool is used to identify where market's likely to pull back to. Now, if we bring on our Fib retracement tool and go from swing high to swing low, you can see that 618 retracement right there. Okay, so already you can see how that's respected that Fib retracement. 618, the golden mean, we just about tipped that area and then rolled over, okay? We actually just passed the 50%. So between the 50% and 618, we rolled over. Now, we're on a roll now. So now the question is, where's market likely to go next? Now, if I bring on my Fib extension tool and go from the same high to the same low, right, and back up, you're going to see that the 127 extension is down at 1048. The 1618 is up at is down at 0873. Now, me personally, if I was a trend following trader, I still wouldn't be comfortable shooting for beyond the 127 extension. That's a nice extension of a trend. Conventionally, that's a great place to look for an extension. But what I would urge you to do is, I wouldn't purely trade off of fibs. I know there's people who trade off of fibs. What I like to do is just use them as confluence, okay, and confirmation, as basically a scoring system. So what I would be more inclined to do is to add some more filters on this. So for instance, I could bring on a equal measured move. So I could clone this, and I could go, right, okay, do we have any confluence there? Great, we've got a 1414 extension lining up. with the equal measured move. Another thing you can do is a Fibonacci inversion. So you bring on the extension tool and you go from the pullback to the previous low and back up, okay? And you can see we've got that 1618 inversion. So all of a sudden what we're doing is we are starting to iron out a real nice little high probability zone here of where market's likely to go to. And then finally what I'd like to do is bring a kind of horizontal line down to that level and look back and see if that is a major structure level. Now look, right? So if we look just historically, just recent history, okay, we can see that we've got 1, 2, 3, 4, 5, 6, 7, 8. 8 levels of respected, that price level has been respected 8 times just since, on the higher time frame since September 19. So now using filters and using confluence can really give you a powerful edge, because now it's like, well, all these stars are aligning here. If I was short and I was looking to take my profits off, where would be a high probability to take my profits off without, you know, missing out or being in a painful setup that goes sideways for days and days? Well, look, you might want to get your orders just above this area, right? Mightn't you? Instead of having an order down here at the 1618, look at this. Look at where all this cluster of confluence is. Might be an idea to get your orders just above that zone, mightn't it? But it also means, we also know that these levels are like magnets. If you can build this confluence that strong, the market is likely to test that zone. So if you're short, it's likely to go down there. Where your orders want to be to take your profits, obviously just above that zone. But it also can dictate whether the move's worth taking or not, because you might find that where your stop loss has to go just doesn't provide you enough risk reward. So in this particular situation, if you waited for this pullback and you got in on this lower low, lower close, this 3-bar reversal here, you would have entered that market about 1410. Okay, and if you're shooting for that extension and your stops are above, your stops are above previous structure, say, you've got a nice reward to risk, 1.3 to 1. So that's one case of how you might use a fib extension tool. You can also use this if you are looking for, let's just say that you're a counter trend trader, okay, and you're looking for areas where you might want to buy this up. So you're looking for the counter move, you're looking to buy the pullbacks. Typically, you're not looking for a big move when you're looking for counter moves, unless you're at the end of a trend like a head and shoulders or something like that. But let's just say that you're looking at where this market's likely to go to next and then pause. Well, then you can use it in that situation as well, because look, this is a level where we're likely to see a strong area of support. So then you might go, okay, I'll wait to see price push down there, and then I'll look for my entry reasons. I'll look for my entry signal, and I'll be taking targets below. Again, you do the analysis again. You do the confluence. You're thinking like the other traders, as many other traders as you can. So for every bit of analysis, where you're looking to take targets, shouldn't just go on your opinion. It should go on where is a safe place and high probability place that market's likely to go, but not struggle to get beyond. And you want to put your target at the optimum position, right? And the same thing should be done for your stop losses. Your stop losses should be at a place where they're not likely to be taken out before we see the move take place. So you want to be doing all this analysis for your stop loss, your entry, your stop loss, and your targets, right? So where's the if I'm looking to buy this up as a counter trend trader, where is price likely to go to the most without seeing any resistance? Well, let's bring on the fib retracement. Again, 382 pullback, that looks good. That's previous structure support. It's just below that level, 382 retracement. If I draw on a horizontal line at the 382 retracement, what happens previously? Oh, look, I've got a major level of structure here, major level of structure here. It was then resistance, resistance, resistance. It was support, 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 and so on. You're putting the same effort into target taking and stop loss placement as you are a entry. And the reason being is because they're all orders. Your stop loss is going to be someone else's sell order. Your stop loss is going to be someone else's buy order. If you can do this and use this confluence, every one of your orders is going to be played differently. Make sense? We're looking at high probability zones for your entry, but we're also looking at high probability zones for your stop loss and high probability zones for your targets, because they're all orders. We want the target to be hit. We want the stop loss at a position where it's not likely to be hit. I see a lot of traders focused on where to get in, but they have no focus on where to get out or where their stop loss is. And it's just like that causes them to not let their winners run, and they take profits early, or they just keep moving their stop loss because they've got no plan. All right, guys, so that's it. Hopefully you got value from that. If you want to hear about any other topics on trading or wealth creation related, let me know in the comments and I'll be happy to do a video on that. Till next time, have a great rest of your day and I'll see you then.